Strategist out of the Bay Area in California, and we're just going to be talking a little bit about the marketplace, what's happening, and some of the top secrets of why a mortgage strategist can help you create and preserve more wealth on your next purchase or refinance. Hey Jim, how you doing today?
I'm doing good. How are you?
I'm great. Hey, for our listeners and viewers getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, so Bay Area guy, grew up in the Bay Area in the East Bay, and I like to say, grew up in Pleasanton and made it to San Ramon, so I never really made it far. But because I love it so much here in the Bay Area. Found the mortgage business in my late 20s and fell in love with it. Grew in the business over the last 20 plus years. Most of the work that I did and the most success that I've had is serving the high net worth group. So developing complex mortgage strategies for complex individuals. And a lot of times what we find is that a borrower who has very thick tax returns they're able to find lots of tax efficiencies and write a lot of things off. They don't qualify for a mortgage because they are left with no documentable income. And so it's important for someone like myself to come in and, I really found a niche in that where I could come in and make sense of it and prove, which is one of the requirements of a mortgage, prove ability to repay by showing how that is just tax efficiency versus cash flow.
Amazing. Yeah, tax flow versus cash flow and being a mortgage strategist. We're going to dive into that secret here in a minute, a little bit deeper for our audience. But before we go there, Jim, I want to take one other step back. I believe we've all been given certain gifts. These gifts have been given to us to be a blessing, help to others. Some people call them strengths, some people call them superpowers. Maybe go back to your high school days. What are the one or two strengths or gifts you believe you were given, and how does that help how you help and bless people today?
Yeah, it's a great question. And I've always felt that I'm able to connect with people very well. So I'm able to understand them, and I find that I can take I found that I'm good at taking very complex things and making them easy to understand, which is important in the business that we're in. And so it's just something that kind of found me.
Perfect. Making complex things simple and connecting with people to help them out. Those are great gifts. So let's apply that to the number one secret to being a mortgage strategist, or what should the client be looking for in a mortgage strategist? What's the number one that they should be focused on?
It's got to be trust. I mean, it's got to be somebody that you connect with and you trust, someone who can look at more than just an interest rate or a transaction, I guess is what I'm saying. It needs to be much bigger than just a transaction. It needs to be concern and care for their overall financial wealth development, tax mitigation, tax efficiency, bringing into account all of it's important for a mortgage strategist to bring a perspective of the hundreds or thousands of transactions they've done to help show, here's where I've seen other clients really do better or get hurt, right? So here's what we want to watch out for, and here's some things you might not have considered with regard to capital gains or trust and estate or long-term planning. Those things are really, really important, especially as the financials get more and more complex.
Couldn't agree more. I believe we get paid for solving problems, right? At the end of the day, to the ability and the extent that we can solve complex problems is to the ability that we can get paid and actually serve a client at a higher level. So I love the idea of cash flow and tax flow, right, and looking at the whole part of what's going on with the client. And sometimes I feel like the client shows up with this Rubik's Cube, and each of them is a little bit different. Their colors are a little bit different. And part of our goal is to clarify what a cube that was congruent in each different color on each side, and then bring in the specialist or be that specialist to help move that and work with their CPA, work with their financial advisor, look at their mortgage on their house, the mortgages on their commercial real estate, and kind of try to bring that all to a congruency. So talk to us about some complex deals that you've worked on to do just that.
Sure. So, with a lot of being in the Bay Area, there's a lot of tech money, a lot of tech founders, and we'll see as an example, a real easy example is that these startups oftentimes will will pay in stock, and they'll restricted stock units, RSUs. So we see this quite a bit in the Bay Area. And when I work with financial institutions and underwriters who are outside of the Bay Area, they don't see it that often. And I find myself educating underwriters on how RSUs work, as an example. And so RSUs, interestingly enough, can be considered as income because you're W-2'd on them. But from an underwriter's perspective, they sometimes will look at them as assets, depending on if you've used them as income or if you've preserved them as assets. And that's an important distinction when you're underwriting a mortgage. How, again, as part of as part of a borrower's group of financial professionals they surround themselves with, their team, it's important to look at that and just make sure that I'm talking to the other members of the team, the trust and estate attorney, the CPA, the financial advisor, and make sure that we're if we need to liquidate some of those, maybe liquidation is not the right way to go. Maybe encumbering those assets is a much more efficient. We see that all the time, and there's ways that we can do that that really change the game on the cost of money for the borrower.
I think it's so important is to work as a team of professionals. Be willing to work with the CPA, the financial advisor, the commercial broker, the luxury real estate agent, all of those things together. So how have you, over the years, learned to try to bring the team together?
Yeah, it's just like everything else. It's all about relationships, and so it's understanding who the other person is. It's understanding what it is that they're bringing to the table for that transaction, for that client, and making sure that the part that I do, I always call, that it's usually the financial advisor that I call the quarterback of the account and for the client relationship. And I'm just running one play, which is the mortgage play. I just want to make sure that it's synced to the rest of the team, right? And that so the only way to do that is to really know that team and work with them on a regular basis and spend time with them. And I find that there's, most of these people at that level, I really enjoy spending time with on a personal level. So I do. Sometimes, if there's not a fit, we go on and we find someone else who can fill that role, but we make sure that it's a cohesive fit as a team for us, but also for the client, so they're getting that right experience.
Very well said. We recently connected on some capital gains tax challenges and some joint clients, or not joint clients yet, but some potential joint clients, but the high net worth individuals that we're serving. And so we've been chatting about that, but I'm curious, what have you seen the biggest frustration for high-end primary homeowners or tech entrepreneurs that are selling highly appreciated assets, businesses, real estate, crypto, and have this big capital gains tax? What's been the biggest challenge you've seen with other solutions that are out there?
Well, it's usually 1031 exchange that crosses my desk as a residential guy, and it's 1031 exchange is an expensive, kind of complex transaction, and the savings that they're getting. It's not that there's also a lot of misconceptions about 1031. A lot of people think they're not paying the tax. They are, of course, it's deferred, but that they end up, in essence, with that savings, buying themselves a job of being a landlord, which they maybe didn't sign up for. And maybe the tax code didn't talk about the fact that they'd be a landlord, which is a very different element to life, right? Is it really worth buying that extra job and being a landlord so that you can defer, not avoid, defer those taxes? So
100%. And likewise, sometimes these luxury high-end homeowners in the Bay Area, the Palo Altos, the Athertons, the Menlo Parks, parts of San Jose, they have this primary home they've owned for 20 or 30 years, and then they go, well, I'll just rent it out for a couple of years, and then I'll just 1031 exchange, and maybe that's what you're speaking to. It's like, well, why are you selling the house in the first place, and are you really going to go create yourself a new job just to defer this tax and have more toilets, more trash, more liability, and perhaps some headaches with some challenges to being a landlord in California? Because let's face it, California's changed a lot in the last 30 years.
that's right.
And sometimes people don't know what they're getting themselves into just to let the tax tail. And then this side, not even wag just the investment dog, to wag the lifestyle dog, right? And so how are you helping people to get clarity on that besides just telling them maybe some of the stories that clients have been through?
Yeah, it's, I'm not qualified to provide legal or tax advice. So the best thing I can do for clients is just to understand their situation, really hear them out, and then connect them to the right people. And that's what I do. And, I'll tell stories to clients of, well, I can't give you advice on this, but here's what I've seen other clients. Here's what I've seen other CPAs who have financed their homes. This is what they've done. And there's a lot of creative things that you can do within the tax code that is available to a lot of people that I just make people aware that this is something to ask. It's not advice, but something to ask your CPA and check this out. And then here's some people that I trust in the business.
Got it. Let's talk about inflation right now, right? I mean, we've seen a change in interest rates. Talk about what's happened in the last year, where you feel like inflation's been, where rates have gone and margins have gone, right? Because they're different things. And even then, the last couple of weeks, maybe they've eased up a little bit. But give us kind of what's happened in the last 3-6 months and where we're at right now. And we're recording this in August of 2022.
Yeah. So, we saw an unprecedented increase into money supply. The Fed's balance sheet, in fact, went from $4 trillion to about $9 trillion in just 2 years. It's just unprecedented. So when you flood the economy with that much money, you're going to have inflation. And in my opinion, they waited too long to start slowing things down and hiking. It was only about 120 days, maybe 150 days ago, they were still buying mortgage bonds, and yet they knew inflation was present. They were still trying to accommodate, and so now what the Fed is doing, and so we saw these crazy inflation numbers. They're back to 1983 numbers. It's been a long time since we've seen rates in the nines. I personally think that we've either peaked in inflation or we're close. The Fed has gotten extremely aggressive in raising the short end, which fights inflation. Lots of confusion around that. A lot of people think the Fed raises rates and mortgage rates go up. It's the opposite, typically, and that's because the cost of inflation erodes the value of long-term bonds. So you're not going to get a whole lot of investors who want a bond that 10 years from now is going to be worth equivalent of half of what it is today. When they get their money back, it's not going to be worth anything. So and that's because of inflation. So if they can keep inflation under control, the Fed, then it's going to attract more investors into the bond market, which is where mortgages come from. And so we're seeing that inflation numbers start to come down, in my opinion. We're seeing gasoline prices come down. We're starting to see some relief in the supply chain, which is going to help inflation to come down. We've seen 2 consecutive quarters of GDP that have been negative, which means that we're probably in a recession today already, even though it's not been declared. And so in a recession, in these types of environments where inflation's coming down, mortgage rates do improve. And I think it's an interesting phenomenon because there's a lot of people who are really worried about mortgage rates going through the roof. And so as a result, they're panic selling their home, feeling like they missed the all-time high, so they're panic selling and don't want to buy anything else. The reality is when rates go up, and they were much higher than they are today for mortgage rates, that hurts values of properties. Conversely, as the rates start to come back down, that can mean there's a lot of support for property values. So I think it's important that a home buyer really work with a mortgage strategist who understands that and a team who understands that, so we get this right for the long-term purchase. You're probably going to own the house for a long time, but most likely you'll end up refinancing several times as rates improve.
Very well said, Jim. I don't know if I've heard it said better. Thank you so much for sharing that. Are you ready for the lightning round?
Let's do it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you make sure to tell yourself to do?
I think I would tell myself to take a little bit more time and just enjoy this beautiful state of California that I live in.
Absolutely. Question number 2, what's the number 1 book you've recommended or gifted the most in the past year?
In the past year, I thought it was going to be all time.
And it can be.
Well, the all-time is Ultimate Sales Machine. It was really good. Business geek. I like that stuff.
Love it. And question number 3: what are you most curious about right now?
I'm curious about the world. As the world gets smaller, and we all have more connections with each other, not just in our own local communities, our own country, but internationally, we're all kind of going through the same things. And I think that in the past, there's been a lot more separation from that, but now we really see what's happening. We can see what's happening with mortgages in other countries, and with the way people respond, and the way their governments respond, and how do their governments, how are foreign governments really trying to help the economies and control inflation, and how does that impact us overall? What happens in Russia, Ukraine, Taiwan? All of that affects the costs, our borrowing costs here. So we are all really, really connected. And so I'm really curious how, as we move forward, will we as a human race be able to take really stitch together 7 billion people and find a way for us all to mutually succeed?
Very well said. Last question, since we're out of time. What's the number one habit that you try to practice, either daily or weekly, to help you stay encouraged to stay centered in your values and charge forward to reach new heights?
Gratitude, absolutely. I'm very, very, very lucky to live where I live, have what I have this beautiful family that I've got, amazing career, very grateful.
Excellent. Hey, Jim, it's been more than a pleasure. I want to encourage you to keep connecting with people. I want to encourage you to keep using the gift of even numbers and strategy, and helping people make great decisions with their mortgages and their wealth, right? Because at the end of the day, it's like a Roman legion. Everyone has a shield with a little spear, right? And the goal is, how do we all help those to create and preserve more wealth? And for our listeners who want to get in touch with you, or someone who's watching it, what's the best place for them to find you?
Our website, jimgallup.com. Gallup is the way to spell my last name.
Excellent. Hey, thanks everyone for watching this podcast or this YouTube video. If you're watching it, please rate, review, subscribe. We so appreciate everyone out there. Please share this with someone who could be inspired today by all of the wisdom that Jim shared with us.